Today is the day to master the market.
90% of the time, today's price action or the day that you get your NFP data out, 90% of the time, it actually marks the high or the low for that entire month, believe it or not.
Gain the knowledge that top traders use every day.
But the market is going to take its time to decipher whether or not they believe the data that we got today. We've got to give the market some time. That's why this part of the rule set here, which I will get to.
Turn knowledge into action and you'll dominate the market.
There's big space between some of these. You know there's like a big move coming.
Join our free webinar and start mastering NFP trading. Register now.
What up? We made it. Did you guys know? Did you know we have a free webinar? There it is. Anyways, it's in the chat. Go ahead, register. It's Wednesday after the close. But man, happy Monday. If you guys didn't know, last week wasn't actually NFP week. It's this week. Wild, right? We are, is SPY going to try and do this? Is it? No. I was like, what's the high of Friday? It's 568. Man, it's going to be a big one. Dude, we got our boy in the house too. Let me check in. Look at this guy. Good guy. What's up, man? Happy Monday, dude. How's your weekend?
Happy Monday. Good weekend. A lot of kid activities, a lot of sports on TV, you know.
Nice.
A little short the open last night on futures, so we're having a good Monday.
Wowzers.
Yeah, well, we hit the 200 day. I just had to figure it was going to pull back at least into this morning.
Yeah, not a bad one. Dude, we are you ready for Mother's Day next weekend? I guess it's Sunday.
Dude, I have 4 things in my Amazon cart right now.
It's time. Happy Mother's Day coming. Almost Mother's Day. It's not quite, but by the time
it's Sunday, right?
Yeah, it's Sunday.
For y'all, Sunday.
I think it's Sunday. If I'm wrong, then I'll have 2 Mother's Day. But I'm pretty sure it's Sunday. So for any moms out there, I might not see you before then. So happy Mother's Day for sure.
It's in Latin American countries, it's on the 10th every year, no matter what.
Is it? Look at that.
Yes. So we have like 2 Mother's Days. So if I miss one, I've got like a backup.
Good background. All right, so let's kick it off, guys. Happy Monday to all. Hope you guys had a good weekend. Look at June's in the house, Midwest in the house. Man, a bunch of regulars. Peter in the house. Look at Frazier, Arnie, Analyzer, man, Gatekeeper, Patrick. What is up? Did you know? By the way, I guess I did. I did blow. You guys all in there. I did blow my my sports bet streak. It was good. It was good for a minute.
Well, you didn't get saved by the Winnipeg Jets?
No, I did get saved, but like, to be fair, the streak is blown, right? Like, I had 4 picks this week. I had Colorado Avalanche for NHL, and then I had, for whatever reason, I had the Clippers. Like, the first intuition on the NBA one was like Nuggets, but then we ended up flipping to the Clippers, which ended up being a really bad flip. So I lost the Clippers and I lost the Avalanche. That was disappointing too. Like, Avalanche was good the whole game until like something happened dude. All I can say is playoff hockey is crazy. Like, playoff hockey is absolutely crazy. These teams are not the same as they are in the regular season. But Robin Hoodie, tell you what, this wouldn't be a conversation if it wasn't happening on the hoodie. And dude, that's where it's all going down. Yeah, the Jets saved me. I did have Winnipeg and the Warriors for sure. What's up, Savage? And Big Billy. Look at Edward in the house. We do have Miss Cleo coming this weekend for sure. And I got a lot of background, the kiddos. But but let's get to it. So here's my thumbnail this week. It's a funky one. If you didn't know, now you know. We do have FOMC this week. We will get into the charts, But hey, Patrick. Hey, look, I got 2 out of 4, but I lost 2 in a row. Here's where I'm at. We have rallied up to a very critical resistance level. I will say that. M talked about being short for a little bit over the weekend. We're gonna talk about. Has anybody heard the term the wall of worry? There's a term in the markets called the wall of worry, and the market tends to climb that wall of worry. And we've been talking about peak fear, and then more recently we've been talking about going into like a complacency mentality of like around trade war and trade tariffs, and on the opposite side of fear there's euphoria, right? And I think now that we're out of the trade war zone, which again I'll show you guys on the charts later on, I think we've gone into a little bit of euphoria, little bit. And all I'll say on this one is that from my perspective, right, wrong, or different, could be wrong. From my perspective, this is a really tough spot to chase. I would definitely not suggest chasing. I'm not saying to close. I still think it's a buy the dip from here, but we could have gotten a little bit dip. We can still get a dip. The only reason I could think that you would want to be mega long or net new money long, let's say, at this point in the market, is if you believe that the Fed will cut rates on Wednesday. That said, I think there are people that do believe that. And if you are one of those people, then you probably want to be epically long, and you're probably looking for a limit up, like a limit up on the S&P sometime this week. But the odds of that, we'll go through this in the prediction market. The odds of that are slim to none, technically speaking. But again, let's take a look at what went on last week and see if there's any data here that does support that and where we are, right? So we got a lot of data last week. Last week, we got unemployment cost index up 1.2% versus a 1% estimate. That's actually, so this is cost, right? Employment cost index accelerates by most in the last year. We did get some consumer confidence numbers. This is weird. So I like to point out good stuff, but this was a very funky week of data that we got last week. Consumer confidence slumps to its lowest level since July 2022. Wild, right? GDP, here's where it gets a little hairy. We got a GDP, this is a forecast, right? So again, a forecast isn't something to necessarily trade against. The definition of a recession, if you will, is like, and correct me if I'm wrong, I believe it's 3 negative GDP.
Well, the last administration moved the goalpost on it. So
okay.
So what is the definition? They changed it. I don't know what it's back to, but yeah, it's technically it's after 2 negative GDP prints going into that third one.
It might have been 2. Now it's 3.
I believe it's 2, but then it was something about, well, just because it's 2, if the labor market's this or something, I don't know. They moved the goalpost literally 2 years ago. They moved the goalpost. So
they moved the goalpost, by the way, when we had a negative GDP print, and it turned out that really there were already 3 negative GDP prints. They just had the numbers wrong.
Yeah, and they kept revising. Yeah,
they revised it all later to be like, oh yeah, it was negative. We just didn't have it in the forecast, but it already happened. And by the time you saw that, the market was rip-roaring to the upside. That was 2020, end of 2022 into 2023, and that's when they said 2022 we need to revise all this stuff. But the actual negative print came in, I think it was October 2022. 2 quarters technical recession. There you go. That said, I don't think it's a sell anything. That's all TBD. At the end of the day, this move to the downside is still a lot of, let's say, fear about what might be. Nothing of what has happened, because the truth is that actually nothing has happened. Wild enough. But from a price perspective, last week we actually erased all of the Liberation Day pullback drawdown. Let's call it a drawdown. We erased all of the Liberation Day drawdown. And so at that point in time, you say that there are no new tariffs priced into the market, only what was priced in coming into Liberation Day. I think that's fair. So price index so GDP price index comes in at 3% versus, comes in at 3.7%. And this is where the numbers get a little hairy. So the price index estimate was 3%. That's the numbers in parentheses are the estimates. The red numbers are what actually came in. 3.7% versus 2.3% prior. So inflation's still here. Not like crazy, but it's here. Core PC prices estimated to be at 2.2%, coming in hot 3.5 versus 2.6 prior. This is all the GDP numbers. Personal income coming in at 0.7 versus, or 0.5 versus 0.7 prior, slowly coming down for income. But again, then you look at what is our cost, like what's PCE personal expenditures, 0.5 or 0.4 prior. We actually come in at 0. 2.3 for the year over year versus 2.2 consensus estimate. Core PCE index slightly lower, so 0%. So the flat year over year coming in slightly higher. This was 3% prior. So these are pretty far off, really, what we've been looking at. And honestly, we still want to look at the labor market. So labor market is most important. Technically speaking, jobless claims hit a 9-week high. Believe it or not, didn't notice that. Didn't see a whole lot, but didn't seem like a whole lot. But actually, I think I have. Here you go. So this is actually the jobless claims numbers. So this is where we came in last week, 241,000. Not a whole lot, but look at where we were. We've been 1, 2, 3, 4, 5, 6, 7, 8, and then boom, we're right back in there. Not as high as we were at 243, but this is kind of like peak, not necessarily what we want to be looking at. So that's notable. Job cuts in April, 105,441, mostly coming from government. So which is Doge, and I think that's probably fine.
And is that like, how do you measure that out? Is that good or bad? I mean, like, yeah, less jobs, but it's not like the economy itself slowing down. Yeah. It's the government spending. So I think it's an interesting one to try to debate out.
Yeah. Non-farm payroll numbers. So we got this data on Friday. Friday was important date and data to get for the market moving forward. This is going to be basically the day that determines the trend for the rest of the market. So I'll put it in simplest terms. Most of the time, that Friday that the market receives that job data, the non-farm payroll data, most of the time, not all the time, most of the time it actually marks the high or the low for the entire month. And so for right now, we're right in between Friday's range. And what I'll say is I'm going to go ahead and assume that either the high or the low is already in for the entire month. Now, until we break Friday's range, which right now we're literally smack dab in the middle, we don't really have a clean trend to trade. That's definitive. We're kind of like we gap down towards the low end of that range, bouncing a little bit as we speak, going towards the highs. I don't know. I actually don't think that we make the next green day in a row. I think that trend comes to an end based on the NFP system, which if you're not familiar with, we will teach on Wednesday after hours. But you know, in terms of the actual numbers, look, we're coming in at 177,000 new jobs taken. We had a estimate of 140K, 140,000 estimated. So it's slightly higher than estimate, but again, 50,000 less jobs than the prior month. So I think that's really what you have to take in as a whole if you want to look at the numbers. But the price will tell us the story of what's going on before any of that happens. Again, 9-day advance in the S&P. This is literally the longest winning streak since 2004. I'm not a bear, but at this point, I'm very, very, very neutral. And then OPEC, kind of interesting headline, weighs another production increase. So OPEC plus, these headlines come out, and I swear, dude, it's like you inverse whatever the headlines actually say. The chart on oil is starting to look really interesting to me. So for me, I'm starting to really get interested in some of those trades. I think they may be mostly de-risked. We'll see, right? So we have to see a lot of that information come in. I did want to do a quick check on seasonality. It's a little bit different chart here than we're used to seeing. But again, this is the 4-year presidential cycle on the bottom. We are firmly here. May is kind of like, it's kind of up in the air. I wish we had Edgeful. We should reach out to Edgeful and see if they want to sponsor a segment on seasonality or something like that. But there's some good stats out there. This is what I have. This is the May. This is, again, seasonality 100-year average. May is like total wishy-washy, right? Like the last 20 years, it's been decent. April, in general, historically, pretty good month. But here we are. We'll have to see what happens.
What I saw in the like post-election years data for the most part was like May into like middle of June was decent. It was like middle late June was the pullback on post-election.
Yeah, so this is June right here, right? June for sure is negative.
That's what I saw on post-election years.
Yeah, so May for sure is, or June for sure is negative seasonally. So we don't trade off the calendar. We let price action decide. But I'm just saying, just FYI, we typically have June. We usually top out mid to late July, typically, and then then we get August, which can go either way. It's very much like May, and then September is universally ugly, and I mean ugly. So that's where we are, right? And I this is where we are in the 4-year count. We'll have to see. I talked about this wall of worry before, and there's actually, I just pulled this off the internet. I don't even know where this like goes, but it's funny, as we go into the higher that we go, the more of a euphoric kind of stance the market tends to take. And I'm just not sure that that's what I personally want to chase, right? Like I might be wrong and we might miss out. Look, I'm long, and we'll go into the charts, but I do think that there is possibly a little bit better of a dip buy to get in from a medium term perspective. But if you haven't checked out June is here. If you haven't checked out like what the wall of worry is, take a look at it. It's interesting, right? To see like here's what's going on. You get these. This is Y2K and the .com bubble, and then fear for sure. SARS outbreak, max fear, and it's just crazy, right? Like this was the yen carry trade collapse, which came down. I think that's an interesting point. The yen carry trade on the charts might be a level that I think we could be pretty interested in. It lines up pretty well technically too. But just a quick highlight on what we have moving forward, and then we'll shift over to Lux's Catalyst Watch. But so ISM services today, let me see what that looks like. I think that came out already. A lot of 50s. So anything over 50, we're in expansion. The only thing that's not over 50 is ISM services employments. That's coming in at 49. Everything else actually looks good. We got the bill auctions done. Bill auctions, by the way, bill just means anything less than 1 year. And then we have a 3-year note auction, which is anything over 1 year. 3-year note auction later today. Later on today. Tomorrow, imports, exports. We do have a 10-year auction. We still want to watch these auctions. They're pretty important, especially if there's not a lot of buyers. The 10-year, probably one of the most important auctions if you're going to track them. 2-year and 10-year, obviously. Those are the two main ones. And then FOMC on Wednesday, which again, this is the big day of the week. We could be in for a pretty heavy pivot. We'll have to see, but the market right now, and we can look. I should look at this. We'll do the CBOE forecast. Oops, where'd it go? CBOE. Fed Watch tool. I hate this AI thing that pops up sometimes. So probabilities, we are 97.6% of no change. 97.6% no change. Ooh, did this change?
Yeah,
it did change. We were pricing in I'm pretty sure June.
45 cents.
Yeah, we were pricing. Look at this. Look at this. So we were pricing in a rate cut in June, and now it looks like there's only a 27% probability of rate
Go
cut.
to click on current and scroll down and look at the 1 week, 1 day change right there. Look at the change, the second line. Look at the change from 1 week ago. Yeah, that right there.
60% increase to nothing.
It was a 60% chance of a rate cut. It's dropped all the way to 27.
Yeah, so that I just noticed that's a big deal. So maybe this kind of puts this sorry, I didn't realize that had happened until literally just now. So so that puts more of a focus on the commentary. I don't think anybody thinks he's gonna cut. And I saw some of you guys in the comments here where, it's if he says that there's a cut, the thing is, even if he doesn't cut, but then he says we're gonna have a cut next quarter or next meeting. I don't even know why would he say that? I don't know that he would say that. I mean, has he ever said we're gonna cut?
Data dependent.
Has he literally ever said we're gonna cut next meeting?
He just shifts his tone a little bit. Maybe you get a dot plot. It's really the other ones that will come out maybe Friday and say something that would change the market's opinion. But why would he cut? He has the easiest out ever right now.
I think he does as well.
Commander of Chaos is in the White House. Like he has the easiest out to not cut.
Yeah, so that's crazy to see this. Yeah, it was 60% last week. Now it's 35%. I mean, 1 month ago, it was, what is this? I mean, these are changing all over the place. But yeah, now we have no cut. 1, 2, 3. All right. I mean, basically, they pushed a cut. The market has pushed a full cut off the table. So last week, this time, we were looking at 4 rate cuts being priced into the market. This week, we're looking at 3 rate cuts being priced into the market, with the possibility of one of those 3 maybe being more than 25 basis points. And I think that's what we're seeing. Not yet. So that's a big difference. Still 1%, but with the possibility of one of those 3 potentially in September or October being a 50 basis point cut. So that's what happened. Surprise. I was not expecting to see that. And this is what's weird. So then after FOMC, we get jobless claims, which again, very important. But did you see this? 9 Fed speeches on the calendar.
Yeah. They've all been in the blackout period. They're chomping at the bit right now.
They are ready to roll, right? This is just insane. What is this? All right. Will Powell announce a surprise pivot Wednesday and have not bring dude? So I don't know, but what I do see, Charles, shout out Charles, by the way. I do see some sussiness going on with 9 speeches in the same day scheduled. There's some kind of messaging campaign. That's what I mean, sussy. There's a messaging campaign that looks like it's going to hit the street pretty soon. Well, there's no more. It was before. So last week, I think it was blackout week, right? Em? So they turn in their beige book, and then they all have their speeches. Boom, 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 boom. It's right after the beige book, and then they have to go dark. Then they go into their rooms, and then FOMC comes out, and then they get to talk after FOMC again. What if Trump fires the Fed? Dude, I don't know.
Well, it just came out that he can't. I think he finally admitted that he couldn't.
Yeah. It would just be. Yeah.
Or they have to get rid of the whole Fed. They can't get rid of Powell.
Yeah. Look at Heinz. This was the guy at Palo. I was at a Palo Alto meetup. That's true. Very true. But anyways, Well, we can flash on the earnings, and then you know what? Let's just go ahead. Are you ready? Emp is ready.
I'm always ready.
Emp is always ready, man. So if you don't know, we do this piece. So we have like economic calendars that we look at, and then we'll look at some earnings stuff. But there's one of our friends, basically Lux, and I'll post their
You guys probably heard of the caller, right? That JPM
Twitter here.
even
Basically, they on Sunday night or Sunday, they put out a pretty solid what we call Catalyst Watch. And so it's actually not just the calendar; it's any kind of important events, maybe like a investor day or things like that. So we always want to go through that and see if we've missed anything as well. So that's all you, man. You're ready to roll, but definitely give Lux a follow if you haven't already. Just drop their X handle in the comments.
Yeah, there it is right there. Lux Algo. Here's the cover page. Every Sunday around, 6 p.m. Eastern to 8 p.m. Eastern, somewhere in there, you'll get this Catalyst Watch with a basically a little calendar for the week. And also, they always kick it off with a good meme. Now, this week, Jason, I think you won. I think you won the
I won?
Yeah, I like yours better. I like the Gladiator,
Caesar.
Yeah, Caesar. I like that one, but this one's interesting.
We both have Powell.
But yeah, Powell is the meme of the week for sure. Interesting here, but let's jump into it. Today, Monday, obviously we've already been through some of this stuff. We did have the services PMI from S&P and ISM both this morning. Earnings after hours. There's a lot of earnings. I know you're going to hit some of these as well. So I won't spend too much time on it, but there's some big earnings names this week that I know a lot of. I mean, we got through the 4, Mag 7 names last week. We've had 6 of them so far. I know a lot of people though. Palantir, HIMS.
Is Palantir tonight? Oh
yeah, Palantir's tonight. HIMS is tonight. A couple of FinTwit favorites. A lot of the popular stocks, I guess, outside the Mag 7 are reporting this week. So
yeah,
definitely.
Palantir hit a new all-time high today. Let's see.
Take a look.
124. Wow. Nearly 125, dude. This thing is insane. Not quite. 125 and a half would be so close, dude. I mean, just for good measure, they should do it. It tagged it in the pre-market. Look at that.
I think, and I know in overnight trading, like some of the 24-hour Robinhood people were saying that it hit new all-time high last night.
I believe that. 125.40 is the all-time high in Palantir. We did hit that in the pre-market, and we're literally like 70 cents away from that right now. Wow. That would be cool. And why not? Why doesn't it hit it right before earnings?
Might as well. Yeah, probably end of the day.
Might as well make it happen, man.
Why not? All right. Tuesday, going into tomorrow, Japan's closed tomorrow. That's interesting, especially if you're a futures trader that trades overnight. Pay attention to that. 10-year auction, maybe we pay attention to that. I think tomorrow is a very slow day ahead of Powell. That's what I see here. Very slow day ahead of Powell. But we do have Celsius earnings in the morning. I think several people watching that name. Are they finally turning around a little bit?
Price is starting to turn around. I'll give them that.
Price is turning around. Or sentiment, maybe. I don't know. It was kind of the first one to really turn around while the market was coming down. It was.
I mean, it's not like
starting to push up.
It was already in the gulag pretty deep.
It was below the gulag. It used its one bullet in the chamber and died. And now we'll see what happens. But Datadog's another big one people pay attention to. After hours tomorrow, AMD, SMCI. I don't even want to mention SMCI.
Why not?
Are they even a real company?
The preliminary. They already put the preliminary out.
They already put numbers out. They said how terrible it looked. Slash guidance.
Okay, so I read it, and maybe if the chat knows something else, but I read it as
all their orders got pushed back.
Well, 1.5 to 2.5 billion dollars of orders were pushed out in the forecast. So it's not like they took them off the forecast, and I think that's what we're gonna find out. So it's probably, what it's probably gonna be. It's probably gonna be about like how do they address that? Do they say who it was or what project it was or what it was due to? If you think it's due to China tariffs, then maybe it comes back. If you think it's like XAI, pushing out a build and potentially giving it to Dell, then Dell is a beneficiary of that.
That would be a good decision. Sorry.
Well, XAI,
I'm long Dell.
I was like,
I'm just long Dell. I'm just being biased.
I'm pretty positive Dell won that project, but
they did. Yeah. Well, but the SMCI, I mean, the numbers are. I just don't think the earnings are going to matter. But they give these like guided ranges still, right? Like I don't think they have any. Like I don't think they are even putting out real numbers. They haven't yet.
Well,
it was still like
it was $1 billion. It was $1 billion range that they could. They're like, well, it'll go 5.5 or 6.5 billion. I'm like, okay.
Let's talk about some real companies instead.
They're real.
RIVN.
RIVN. I got RIVN. I don't know. I think a little bit more DD. I don't think it's going to be the quarter that breaks out. Doesn't mean that the stock goes down, but I'm interested to hear. I guess they're having a hard time selling. So Tesla did not do good on the EV sales. RIVN booked the Volkswagen gift already. We'll see how they fare moving forward.
The Nancy name as well, Tempest. So, all right, we won't spend too much time on earnings. I'm sure we'll hit kind of a more complete list. Wednesday, there's your rotating light. I don't know if this is not really a police light because it's red. Maybe it's a fireman. I don't know.
It's a
ambulance.
siren.
It's emergency services, right?
Yeah,
FOMC on Wednesday. So that's at 2 p.m. That's your rate decision. That's where your chili pepper's at. And then we all know what the rate decision is going to be. 99.9% sure that it's going to be nothing. So really it's when does Powell's going to give his remarks when he takes the stage. Good afternoon with his purple tie.
Which we will be purple now. It's always purple.
Will be purple. But the statements he makes and then the Q&A. The Q&A is always what's interesting. I usually wait until he walks off of that stage to think about doing anything around that. But we'll be interesting there Wednesday 2 and 2:30.
We will be live, I'm sure, to trade the FOMC release and Q&A as well. But if you don't know, there's a strategy around doing that. But realistically, you got to wait till the stream ends completely to see what's actually going to happen in the market. Because, man, I'll tell you, we've seen so many times more recently where, honestly, the price is going up during the entire presentation. The second that stream ends, it just completely reverses course sometimes. So
or it's kind of or the other side too, right? You'll see it coming down, and then once he shuts up and can't say anything else, then all of a sudden we see people like, oh, okay, hey, we can buy now. Like it's over. He's not going to say anything else bad. So either side, it's always interesting. BOJ monetary minutes, not a huge thing there, but a lot of people are paying attention to what BOJ is doing. But earnings on Wednesday, there's several earnings on Wednesday. Uber, Disney, Gold, Novo Nordisk, Unity Software, ARM after hours, DoorDash, Oxy, Carvana, if anybody's trades that name. Boy, that's a wild name for sure. But it'll be interesting. So you do get some more earnings. I mean, I'm long Uber, so I'm very interested to see what the Uber story is going to be. The chart
looks like it's trying to get out of that box, man. The thing's been stuck.
It's trying. She's trying so hard, but there's no tariff really risk there. So interesting there. But Disney, boy, what in the world is Disney going to do to turn the corner? I was watching a little personal anecdote.
Last night, honey,
dude. Last night I'm watching I'm trying to watch ESPN. The basketball game's finished, the hockey game finishes, and I'm like, I'm gonna go try to find Sports Center. Well, they had some kind of boxing match on, so I go to ESPN2, and they have corgi races, like the corgi dogs, the little not waiter dogs, but the corgis. Yeah. If you don't know corgis, just Google corgi. They had corgi races. It was like heat 3 of corgi races. What are we doing? 2 of them took off before the thing even the bell even rang for them to run. It was a horrible thing. I'm like, is this where ESPN is at right now? I mean, I just don't know if that's a good sign. I don't know, a little personal anecdote. I posted it last night. Yeah. Anyways, we'll keep it rolling. Thursday, UK interest rate decision. So
So we have
Keep around that.
Wednesday on top of Fed. Lux gives us BOJ monetary policy minutes. This is gonna be it's just minutes, but that's on yield curve control, and then UK interest rate decision Thursday morning. Those are not on our calendars for sure.
Yeah. So what these other Fed banks for other countries can make a difference. Definitely worth watching. Weekly jobless claims, we'll get that again. This non-farm initial that they put out for Q1, I've never really seen it have a big reaction, but it's on the list here. We'll keep an eye on it. 30-year auction on Thursday. So we know the 10 and 30-year have both been interesting. So keep an eye on that. A lot of earnings again on Thursday. Shop in the morning. Peloton, Crocs after the close. Affirm, Coinbase, Cloudflare. That's Net, DraftKings. I guess Mara as well. I don't know. BK, or I have to tell BK you missed a dollar sign there.
Oh, he missed it. All right.
But I missed the dollar sign. No problem. But yeah, so that's I mean, there's several, like I said, a lot of different buckets of names, of popular names that people watch out there on the earnings this week. And then Friday, here's all your Fed speakers starting to speak Friday, and you see there's it looks like a panel discussion on a lot of these, so that'll be interesting. But not a whole lot of data other than FOMC, and then a ton of earnings is really what I've taken away from this this watch list for the week. And then yeah, I think it's does Powell like hint at anything? A lot of people will be hanging on every word. I don't foresee anything coming out of that personally. I mean, he's very, very careful with his wording. He always has been, and more so than ever right now because he doesn't want to play the political game. So I just don't think he's going to say much of anything. And then ton of earnings. So I think that's what
it's definitely
paying attention to.
This is, let me see. Is it a panel? So I was 1, 2, 3, 4, 5, 6, 7, 8, 9 speeches. I don't know that it's a panel because they're all different times.
See, the one in the afternoon, they're all at the same time. Williams is speaking twice.
They're all at the same time in the afternoon.
Yeah.
Williams.
I don't know.
Twice.
They like to do that, you know, in case they didn't say enough in the morning. They got to check the market reaction and then come back with some more remarks.
It is wild. Absolutely wild. You know, it's really, really hard to make sense of a lot of this stuff. So, you know, just got to take it one day at a time at the moment. We still have a lot of stuff to look forward to. I mean, earnings looks good. There's definitely some stuff out there. But, you know, in the meantime, if the technicals are hard, we'll always check the other section, the other T in TA that stands for tarot. So with that said, let's give Miss Cleo a shout and see what she has to say. All right, guys. So welcome to the favorite part of the episode. You've all been dying for this. I've been watching you in the comments. Ready for Miss Cleo. Let's see what she has to say. Ready to roll.
She got a better camera this week.
I mean, yeah, she got a better camera this week. Miss Cleo's got to be in the house, dude. She's got to be in the house because I'm here. She's helping us out here. So this week, look at this. So we get a theme card, and then we get a card for every day of the week. So far, I'm just checking the charts. She looks to be pretty on point to me. Oop, God, my mouse. All right, so theme card is the Hermit, which I believe is usually like choppy, trendless. But let's see. I know this card. This is a pretty bullish card. Ace of Cups. But do you know this card, Emp?
I've seen it on here a few times. It usually just trends upward. But then I feel like I'm looking ahead already. I'm seeing that we went from an ace to a king, which is regression.
Yeah. So usually the Ace of Cups is like topping. So you top out, but it can be a good trendy day. So far from the lows, it might be getting a little trendy here. Potentially. We're breaking the highs intraday, but not over Friday's high at all. We haven't quite filled the gap. I think this looks like we're going to fill the gap at some point today, but that might be the fade. Because then we get into the King of Cups. Kind of like the Queen. I really don't know about this one. I'm not. Then Page of Pentacles. This is gold. Then an Ace of Pentacles. This is Wednesday, so this is our FOMC day card. Ace of Pentacles, and then the Chariot. Okay, I really got nothing here, to be completely honest. I got nothing, guys. I don't know what that means. This is King of Cups is Pope Trump now. Yeah, that's possible. Markets are.
I will say it's interesting. It's like Ace King and another Ace. Like it's all like high value cards. I don't know. Let's see what she says, because I'm.
Some people
I'm
like the
perplexed.
Chariot. I have no idea. This Chariot, like, dude, what is? There's so much going on this. Maybe it's choppy. It's like a little yin yang balance here.
Yeah, it's like I dominate bulls and bears.
Yeah, that could be good. I like the neutral. I'll tell you what, man, my condors will love the neutral. I was getting a little skeeched out there for a minute, but but hopefully we'll be all right. Anyway, so this is what the tarot says. So the theme card is the Hermit, right? The Hermit is usually, oh, I thought the Hermit was choppy. Oh, so she says the Hermit is usually all green or all red. All right. This is why his message is to take a break and look within. All right. Well, I'm just saying, I'm not a chaser here. I'm not going to chase this here. One side of the trade will be struggling for most of the week. And he says not to double down or panic. Just walk away for now. I can get with that. I think that these neutral trades are about to start paying off in a big way. That's just my gut. The other side can play momentum in the direction of their portfolio. What does that mean? I have no idea what that means. Anyway, so Monday, that's today. Ace of Cups. Aces bring strong energy and cups bring flowing price action and emotional overload. There you go. Look for the strong. This is Patrick Carver, the Hermit. Look for a strong trend to develop, the highest probability being to the upside. I mean, there you go. Especially on a gap down. It favors continuation, and since Friday was green, that adds to Bull's argument for positive day, at least intraday. It's probably not a great day for day trading. I don't know. I haven't traded today. Was it a good day for day trading?
I mean, if you got long early, maybe. Yeah. It's just been trendy. And it's just like a grindy trend.
A grindy trend, yeah. It's probably not a great day for day trading, but it's a good day to buy. Ooh. She straight up calls this.
Yeah. Buy early, sell late. That's been early, exactly the theme.
And sell late. You know, I get this on she sends these out on Sunday night. I mean, that's a pretty big call, Miss Cleo. Straight up. So tomorrow is where things get a little more interesting. Tuesday is the King of Cups. Crypto reference. Crypto drew this card today as well. I'll post that. So the crypto one was the cups, often signal upcoming emotional turbulence or exuberance. King's message is to not let our emotions get the best of us, but remain cool, calm, and collected. I think I can get with that. Even if we gap up, let's say between now and tomorrow, we hit that Friday high, 568.37. I just, that's going to be overhead resistance for sure. However, unlike crypto, his preference is continuations for stocks rather than mean reversion, which was the crypto card. All right. Crypto, by the way, Bitcoin coming in on 100K. That's going to be a resistance level for sure. At least it was. Let me see what's it at. It's lower now, right? 90.
It got in that 95 to 97 area and got smacked.
Yeah, a
little bit, but it's just pulled back to like where it's consolidated.
Nearly 98. Yeah, look at that. It's not bad. I wouldn't expect a big move, but we may get as far as 0.5% to 0.6% from the close. So this is interesting, and this is going to speak to volatility too. We've been having, it's almost like 1-2% days have been the norm lately, and those ranges actually have been coming in. So it's good to see vol coming in too. I don't know if we're going to see a 16 VIX, 16 handle on the VIX anytime soon, but it's reverting for sure. Wednesday is the Page of Pentacles. This is FOMC day. The page drawn after a king or queen tend to reverse direction and send us back to where we came. There you go. Expect a move equal to or greater than was seen on Tuesday. I'm not so sure that's a big move, but she's saying that the momentum is going to be similar to Tuesday. The Pentacles may hint at a profitable day for most of us, perhaps an easy trading environment without a lot of back and forth. I don't know how many FOMCs she's been to, but this is a lot of back and forth normally on FOMC day. Pentacles hint at a profitable trend is possible, but it's more likely that we close less than 1% away from the open. All right. So not a big mover day there. Thursday, Ace of Pentacles, King, Page, Ace is an interesting combo because the Ace could serve as either a starter or a finisher, depending on the setup. So post FOMC, I struggle to predict direction here. Okay, cool. But what I can tell you is that the card usually brings the same energy that was seen the day before, meaning a trend day brings a trend day and a chop day brings more chop. Trend day brings more trend, chop brings more chop. 50-50 shot at continuation or mean reversion. She has no clue. Wait for the move to develop before jumping in. That's fair. She said out of the gate, I know nothing here. Having a hard time predicting, but that's okay. So Thursday, she thinks going to match Wednesday, whatever Wednesday ends up being. So Friday, though, this is the card that you guys liked. All right. The Chariot, not a lot of historical data on the card, but the data we do have says expect mean reversion again.
Again.
With the same amount of energy that was seen the day before. So that would be trend, or chop, chop, chop. Interesting. The Chariot does tend to bring lots of movement, which can inspire a haven for day traders. But remember that the Hermit is mostly one-dimensional, and when Major Arcana arrives, it's likely to reinforce the theme card. This week's dominant energy is likely to prevail. Yeah, I like that. Recap. Like crypto, it looks like we've got plenty of mean reversion in store. We need to watch every day's close to gauge the size of the next day's moves. Okay, so we need to watch every day's range to gauge the day of the following range. I think this is interesting, like the theme card in general. And I'll go over to SPY. Let me see if I have that. What's it setting here? So this is SPY. And this is Friday's high. So even if we come up, either this is going to constantly serve as resistance, or this is going to constantly serve as support. One of the two, but very likely in this box, which fits my sentiment for sure. What do you think of Miss Cleo, man?
I was Chanel today. I think she's saying don't do much of anything this week, which lines up with some other actual market strategies that
I honestly, I think that might be the best bet in general. But yeah, it's looking like it could be a bit of a hard week. That's for sure. If you don't know, by the way, though, so I'll just do this last one. We will do the training. So I don't know. So usually after an NFP day, it can get a little wild. And so what we do, let me see if I can grab this link for you guys. What we tend to do is we got to wait for this market to digest, and we definitely wait for it to digest through Friday's range. If you don't know that we have a system, we do have a full-blown system. I just dropped the registration in the chat. You can click it there. It's free. It's Wednesday after hours, but that I'm going to go through all the system rules. we do have some stuff that helps it make it a little bit easier for you guys to follow. But in general, it's a full system. We'll outline all the step-by-step stuff. And honestly, dude, since developing the system, man, like trading as like just next level. But your level of confidence in general to be able to find the trend is just going to be absolutely insane. So with that said, let's go ahead and get out of the PowerPoint and let's get into some charts. I know you guys had a couple questions or a couple, what's the word?
I gotta roll out too.
Appreciate you, man.
I'll be watching in the background.
All right. What we do, basically here, I'll take your video down you can watch if you want. I'll take your video down, big dog. I love you. This is my first look. So SPY, Qs, diamonds, IWM. Last week, and then on the bottom, I have kind of things that I'm watching as like a general trend barometer. So the dollar, I got Biddy here. I've been watching gold, but you can use TLT as well, or TNX is the 10-year yield. Either one of those are going to be important. 10-year yield coming up today. It's just kind of like bouncy level, right? That means so yields are inverse to the bonds. So it would likely mean that some of your bonds are down today, which yes, they are. So they've been trending a little bit down, but VIX also coming in as well. I'm just going to start high level at the SPY. This is where we were coming into today. So this is this white box here. This is what I'm going to label right now as the trade war zone. And so this is Liberation Day here, Wednesday. This is the big sell-off. The market catches a lot of stuff that we were not expecting. And we come into this big chop zone where we get stuck for quite a while. When I turn on our non-farm payroll levels, which yes is an indicator, but and I'll just kind of take out some of the noise here. Let's go 3, just so you see it. This ends up being April's NFP high and low, which regardless of what was going on in the market, still ultra valid, right? So this ends up being the low, which we kind of breached, but never really closed below. One closed below, instantly came back over. And then it was, for me, this day here, Tuesday the 22nd, that was like, all right, we're going. We have a higher low here, and we were just off to the races. For most technical people, it's this level right here, 540, which is really weird, right? Because it was kind of like, to me, it was weird. It's not a level that you normally would have seen coming out, because even on this day, you have like a 3-day balance. Let me just take this down for a minute. But you have really like this 3-day balance that ends up looking very toppy. 1, 2, 3, and starting to break below on Thursday, which oddly enough got instantly bought up, or I'm sorry, Wednesday, instantly bought up. So the bears, and this is important because I will say that the bears here, this was a pretty bearish setup. Like it could have come down. We tested this trend line right here, the bot. If you didn't have that, you might have had that from our streams. But this setup in this moment is what I have been seeing quite a bit. And I don't know if we're going to see more of it or not, but this is a pretty bearish setup coming into this print. And what happens is that, there's a moment in time where the bears have like, come on screen. The bears have like full control. But what we've been seeing is that they've just been absolutely failing to deliver. Right. And so, that ends up with a quick failure to push SPY lower from the bear's perspective. Look at this. This is a 30-minute candle. This is looking ugly into that moment. But again, if you don't have that trend line, you're probably looking for a 20-day retest closer to 534 and filling a pretty clean fair value to the downside. If you don't see it here on the charts, this still exists. We have a couple of these where the market has just kind of like run up. So we have, I don't think this goes, but that's probably the cleanest one that does still exist to this day, type kind of towards that 540, low 530 areas. But this is a setup that I think is important because this is a pretty bearish move that the index started to do. And literally out of the gate, as the market starts to open, it's an instant fail. And you're like, whoa, 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 whoa. Normally we would have gone straight down here. But the fact that the bears have had multiple opportunities in this moment to continue the trend down, or at least push back down for a bit of a retest, it just really not a like they're just failing to deliver every time I turn around. And just looking at a view like this, you're not going to notice, honestly, you're not going to notice 540 being a level. You would have had to have been looking at it more like this, straight across, and you would have tagged it right in here, right? So this is interesting. But this is the trade war box. This is the day that we got the tweet, 90-day pause on tariff, goes all the way to the top of the box and creates that kind of trade war imbalance or trade war zone right here. So if we're in this box, all I could say is that the market is pricing in some uncertainty in regards to tariffs themselves, but holding outside of that, that was pretty bullish. That moves us into moving away from like complacency and the higher mentality, talking about that wall of worry. The higher that we go, and here's Liberation Day, right? So that Liberation Day move, this is right here, Wednesday. And I think we're live. Is this live? Now the chart's live. We are still right back to where we started all of this, right? So again, that's where we are. And we have with FOMC coming up, and so if you look at all these SMAs, this red line is the 200-day simple moving average right in here. Blue line is the 50-day. We are holding that. But if we do lock in a higher low, a lower high into that Liberation Day level below the 200-day simple, I just think it might get a little choppy. Things get choppy all the time inside, like right around a 200-day simple moving average. But that said, I still think this could be the box, which ideally a retest back towards that 20-day simple moving average would be in line. But I think you can kind of just wait this one out, and you may get even a little test like this. It could be a better dip buy. And I would look for, let's see, this level to begin to hold and act as support again. So essentially what I'm saying is that I don't want to chase this, but I do want to see if we can breach 550. I'm getting a little personal here, so that's more of like my look to hold this. And if we do hold that, this whole situation here, and I'm zooming out a little bit, could easily turn into, what do we say, like an inverse head and shoulder to launch the market significantly higher if that happens. So I would not be just like deterred by a pullback. I would actually still be in the mindset of like that's likely a potential dip buy possibility. But again, it's not something that I would really be trading for. It's not something I would be worried about in terms like from a longer term perspective. Hopefully that makes sense. So I'm just going to put these on here really quick. We are coming into a lot of overhead resistance right now. So this is Liberation Day, just a slightly higher above. This level right now, 565.63, that we're actually rejecting in this moment happens to be that March NFP zone right here. So I think this remains overhead resistance just like that from that March level. And if we do get a push up through the 200-day simple from, let's say it's FOMC or something like that, that would put, from a price action perspective, your next target just under 580, call it like 578 to the upside, which would basically price us back to where we were in January, right in there. But we do have a bit of an overhead supply just under 578. So up here, this is serious resistance, massive resistance. This is another level of resistance right here, 565. But again, I'd be more into a bit of a pullback somewhere in this area. This is the yen carry trade here that we were talking about. And if I draw this all the way over, this is actually that same level that we pushed up out of. That's 540. from the yen carry trade, which kind of gives me a lot of confluence if we do see something like that. But again, what I will say is that if we're over 570 and we're holding 570, which was slightly over Friday's high, that whole dip buy, next dip buy potential is just completely not happening. And then in terms of, are we going to get a dip buy? That's not going to happen unless we're below 561. So I think on SPY in general, we do have a bit of a gap up here overnight, which is kind of staring everyone at the face. We have two gaps. So we have an intraday gap up 557 on SPY unfilled. So this is from Thursday to Friday. And then over the weekend, we do have a downside gap currently unfilled, 566. So honestly, this looks like a little bit of a trap in general. One of these two is going to fill, and then you might bounce or reject either way. We're very close to filling the upside gap. If we don't reverse that gap and go higher this week, I'm really not trying to press this. So I definitively want to see more strength before I get net new long, if I do get net new long. Otherwise, I'm more interested into some dip buys. But that said, if 560 holds, 560, basically this low, 561, if that holds this week, then, it's very possible that is the low for the month, and we just keep retesting it all month long. So that's where I'm at. I think we're pretty neutral. We've come a long way. I'm a little bit more interested in dip buys than anything else. We'll take a look at the Qs. It's very same setup, right? So this red line, that 50-day or 200-day simple moving average, trade war box, super similar. It's down in that 470s area. For me, the trigger long, like we're no longer going. Well, I had this pinned to my profile for so long, but it was this level right here, 440 trigger long. But once we had gotten that, we are actually at targets. So that's kind of like my dilemma. My targets on Qs 493.28, very much there. On SPY, it was the same thing. It was like it was 565, and here we are at 565. My target's been acquired near term. So now what happens to me, and I say this all the time, markets are either running or they're resting. I have a feeling that we might at least just go into a rest period. Not a crash, but just a rest period. I think that's more probable than anything else. The pattern people definitely will be getting a little overzealous if they do see some 3-day trends looking a little toppy. But again, if we're not extending yet, I want to be very cautious that could have been the high for May, which means that we're going to pull back and it might be better buyable dips lower, but I do think those would be buyable medium term. So anyways, that's where I'm at on these guys. Average weeks range. I got to change this. Average weeks range on Qs is ginormous. This is an average weeks range on Qs. This is a 14-week average, and that's what I'm taking. Look how big that is. So the retest is like 455, give or take, on QQQ. Basically, this 20-day simple moving average. And I'm pretty sure all last week I said, hey, look, if we get to the 20 days, I would prefer to be a buyer as close to those 20-day simples as I can. That's still completely valid. We're now further away than we were before, and man, we're right up into that overhead supply, right? So if I draw this average weeks box over a little bit more, and if we do get towards that average, you have a lot, and I mean a lot of resistance coming in near that 500. Wow, it would be 500, but it's possible from an average range perspective that Qs does break that. I just think we're in that chop zone where, like, even if it does break 200-day simples, like I I'm not sure that it holds for that long. I think that we've moved a bit, and we could use some chop. Diamonds, pretty strong. Also very close to SPY, like right out of that trade zone box. Here's that 90-day pause tweet right here. That happens to be the low on diamonds, actually, that we held today, interestingly enough, right? So there's that 90-day pause tweet. DIA looks more constructive to me than some of the rest, oddly enough, right? And it's mostly because of where this chart is in proximity to that 90-day pause tweet, right? So like Qs and SPY, when we look at those significantly farther away, this diamonds chart, this like industrials, is a lot closer to that, like retesting that trade war zone and continuing on to the upside. So I actually like this sector a little bit better at the moment. I saw some requests for Boeing. That's going to fall firmly in that box. So interestingly, I do like that. IWM, redheaded stepchild of the group, actually moved quite a bit. This is a cleaner retest of that trade war zone right here. Again, this big candle is that 90-day pause price action. I think that's important. We test 1, 2, 3, little breach right here, and you're kind of off to the races, but right into that 200 psychological resistance area right here. If you can get through this, IWM has a lot more room to the upside to go than some of the others, but it tends to be very choppy. So this is your mid cap sector. I don't mind this one. It's the others. It's SPY as a whole. Again, that look a little bit more exhaustive, if you will. But like we've been seeing, man, I just tell you this much. It's been so wild to see the bears possibly, like sitting in control. Like, look at this right here. Right here, right now, again, this moment, the bears are starting to gain a little bit more control, nearly filled this gap, but even on these pullbacks, they're so shallow, right? Shallow being like they're hitting this right there. It's just higher low, higher high, higher low, higher high. This would be potentially where a higher low shows up again if it does want to fill that complete upside gap to 560, call it 60, just under 567. Something happened in my fridge back there. But at that point, you got to be like, we're done for the trades, right? VIX 23, gold bouncy. And this is interesting. This looked like, again, are you going to breach that 20-day simple and give me the flush down to the 50? No. This is one where I'm actually thinking more potential neutral trades as well. So I might be looking at adding some like gold condors sooner than later, but I don't think it's running a whole lot. I'm going to go ahead and move on. We have a couple. I'm going to do some requests. There's nothing really jumping out at me at the moment. I did see we can do, let's see, oops. There was one. So like this was option one if we do have SPY to the downside, but that's not going to trigger again, not until we're below 570, 560. But for now, I'll just lay it out pretty clean. It's going to be these two white lines right here on SPY. Very simply stated, Friday high, Friday low. Inside the box, we go sideways. Outside the box, meaning I need to see a full day candle completely above or below, open above, close above, or open below, close above, close below to get a clean trend. We're not going to count stuff that opens inside the range and closes outside the range. That's not going to be enough, right? So if you open below, close above, open above, close below, that's not gonna signify anything other than we're still in exactly the same drop. I did see somebody requesting Boeing, so this is gonna be cool. This one, a little bit different. So the 200-week simple moving average or week simple moving average on my chart is this purple line. This is getting very squeezy. I can't believe this is all the way back to the highs. Again, falling right in that diamonds chart that was looking a lot more constructive. Earnings is beyond past. This looks good. This looks pretty good. It's a larger trend count. Yeah, I think you got to watch this one pretty heavily. If I take this area right across, it looks like it wants it, but man, oh man, she is tight. 200-week simple moving average, 189. 200 is a psychological resistance. You have a little bit of a volume pocket right in there. So I think from a weekly perspective, you could look for a push up to 200 week to week, but that would be max. And then you have to stop, right? Because right at that level, then you're going to hit this guy and this entire range of sellers. And then it's TBD. And you're right back in the middle on Boeing. But yeah, she's saved it. It's not going down anymore. If this fails, you're going to lock in a higher low. So it's the same thing. Like, do I want to press this here now? It looks good from a day-to-day count. You're still at the equal highs, though. You're not cracking right through. You have a major moving average here. If it doesn't go through, that's fine. But a pullback could be a little bit deeper into the 160s to potentially launch it, collect some more buyers in this area down here. This is one where I'd kind of like I'd stay long if I was long, and if not, and just see how it goes, and if not, potentially be ready for another dip buy for the finish or move. But it's a watch. It's a watch. You'd have to really get over that 190 level fully, because you're right into a little bit of a fair value trap right now. Not one to chase. Again, this is the theme of the week. Not one to chase at all. All right, I saw a bunch of requests early, so I'm going to try and scroll up and get to those. I might have scrolled too far. Palantir, if you guys are asking, dude, I have no idea where Palantir is going to go. Everybody knows it's overpriced. I will say, if it was going to sell off, if you were going to sell your Palantir, I think you would have done it already. That's a tough one, man. We can look at like what the average moves are in a little bit. All right, and I did see some people. Okay, so SMCI, SMCI, we can look at. Look, there's earnings coming this week. I try not to kind of like do a lot of TA when something has earnings literally right in front of us. But this yellow orangish box is the box that it's been kind of chopping in for a while. Downside of the box is 26s. My gut actually says to not touch this, leave it alone. And again, even if this does lock in a higher low, that's around 30. Like if it holds 30, that's constructive. It's constructive. You don't, yeah, you that's really what you want to see it do. You really want to see it hold 30, 29 to be generous, but it's right in here. This high, slightly higher high. If you lock a higher low inside this small trend count, that is going to be a higher low, but this looks stuck. Honestly, it looks pretty stuck. So earnings is going to have to move it out. Upside would be like 48s, downside 26s on SMCI, and we just did Boeing. So I do like that for sure. What do we expect numbers to be on Palantir, man? I have no idea, but look at this, all-time highs, man. This is just insanely epic. Like, that's crazy. Insane. I did see a lot of 130s going out from March. Let me just look at the chain earlier. They're May monthlies. It looks like they're still there. Wow, those are significantly higher than I remember looking at them. I think they were like $1.50 when I noticed those May 130s. There's 7.25 right now. That's crazy. Well, there you have it. I think if you traded this, for sure, if I took this as a trade, I would be taking about 80% down definitively, and maybe I'd be letting a small percentage, like 20% of profits kind of thing, roll. See what happens. If it's investment, honestly, now that you're at all-time highs, let me just see. This is completely equal calls to puts. There is no put out there that makes any sense. I'm actually seeing people sell May 9th puts. I'm seeing them sell May 9th 120 puts. That makes no sense to me. I think this is more of an option where like swapping out equity to buy leaps in the money, like 80 delta leap as a exposure hedge, like to pull some money back into my account cash, while still staying exposed to the upside and potentially being able to buy the dip later. But yeah, this is going to be a hard one. What I can do is I can go into this, look at Palantir, and say, all right, last quarter, oh my God, it's still a big mover. 25% move, 23% move, 10, 15, and a third. This thing is insane. What's the implied move? Are you joking? It's a $17.50 implied move. Are you kidding me? I mean, $17.50 is 142 to the upside. And 105s to the downside, which quite frankly, we were just there. On this chart, what I will say is that $100 looks like a better downside area. So if you wanted to, I don't know, what's a 120 put? Oh my God, no. I mean, it's so expensive. It's so expensive. Even a 110 put for this week there's a lot of volume on them, but they're $3. And if you nail $100 to the downside, I don't think you're going to get paid. Like if you bought $100 puts, I just don't know that you're going to get paid. Really don't. Couldn't tell you. It's one of those situations. So sorry, guys. Well, that's where we are. Let me see, just going through, and I'll scroll through a little bit quicker as we go. Go ahead and drop it to a couple tickers if you want. Hoodie, still not a buyer. I like this closer to 40. This is interesting. So this is that last resistance area right in here. We chopped in just for a little bit. If we can get, right now we're coming in and we're actually holding 45s, which is crazy to me. I mean, I love to see it. But what we're hitting in terms of overhead resistance, and I'm just going to make this box red, we're hitting this level of resistance. So we got back to the top of that box. We're actually down below it right now, post earnings. So the question is like, what do new investors really have to look forward to? That question would have to get answered, which means that potential pullbacks into these 20-day SMAs as close to 40 or below as you can, assuming everything else stays constant, would be where I like it. I'm going to pull very little teeny tiny. This is what we call like a scout wick. So we're seeing some of these wicks. That's 42. 42. Yeah, I mean, as close to 40 as I can. I'd sold those 38 puts. Like, to be honest with you guys, I don't trade Robinhood a whole lot. I just kind of own it. I don't trade it. I just own it. That looks better. Yeah, I don't mind 42 at all. But again, as close to 40 as I can, I might be doing a little some, maybe a little DCA on this guy. I really wanted lower, but I didn't get it. I sold those 38 puts, hoping to like increase. I sold them for like a nice, like I got them for like $5, And they were red for a while, and I never got put the stock, and I'm honestly a little sad about it, but it's all good. It's all good. All right, scrolling down. Cash is a position. Yeah, cash is definitely in position. Savage. I like this. I think this is a big weight week, no question. So that was hoodie, right? So 50, 55. That's the top of the box, right? On hoodie, I think 52 right here was really it. So it wasn't like 55. And if this does happen, it would be more of a pullback that would be closer to, like I said, close to this. See this blue and white lines? These are these 20 and 50 day SMAs. It's gonna get squeezy. It's gonna get squeezy sooner than later. And so that kind of puts me in the mindset of, yeah, I do want to nibble here, but I really want to be cautious of, like, let's say price goes way below 40s for a while, then this 20-day simple is going to be going, and the 50-day you're going to get another cross. And I don't want price to do this on me and come back down. So therefore, in this area, this is kind of like as close to 40 as I can. Dip buy. If it does breach, I'll be buying more, right? But this is going to be fairly market dependent at the moment, and the market as a whole to me is a bit more of a watch and see than allocate new money. Hopefully that's sensible to you guys. Trading the breakouts is very hard. NCLH is interesting. So Joby, I don't do. NCLH though, look, we're not. So this is one where, like, you are not out of. This is the 90-day pause tweet right here. You're not out of the box. But post earnings, luckily, you breached. I got $13. Did you guys notice this was like up how much? 25% from the earnings low? Wow. I don't know what they said here. TradingView makes it look really rough. But this one's not even out of the trade war box, as we can see. So there are two little areas here that stand out to me. $16 here. This is so choppy. And 19's a big deal. This chart is kind of ugly. Not gonna lie. It's 21 actually. So 21 major overhead resistance. You know, this is not, as long as you're over 16, I don't think that you're really going down anymore. And you might be chopping back up to nearly those prior levels. This is a bit of a break in trend, meaning like if your trend was this downtrend, here's your broken downtrend. Now, honestly, it doesn't look horrible. It could go sideways for a bit before it goes up, but I don't think this is like getting demolished anytime soon. Yeah, you see, like, here's the downtrend, tag, break out, pull back over, hold, $16. This is Friday. There's a big move into Friday, off Thursday into Friday, big overnight move. I don't really hate this. I just don't know that it has the Momo. Holding 17 and the 20-day simple, constructive, at least up into those 18 levels to the 50-day, which would be there. And then it's going to stall, to me, for sure. Possibly pull back a little bit, make a higher low, and then go. But I would almost rather buy this dip than this dip, even though that'd be a huge difference in, I guess, your time horizon. That's definitely your time horizon, but that's what that would look like. Joby, I think it's too small for me to look at, but Yeah, it's pennies. It's a hard one, man. It's over your SMAs, but you do have earnings coming Wednesday, so cannot really do. Heavy at NVIDIA. Yeah, NVIDIA had heavy resistance. So NVIDIA actually gapped down today. Looks like it filled the gap early, right here. I had taken this long. I actually like NVIDIA, but the market's still just at a point where like, oh man, I don't know. I like NVIDIA because earnings are not this week. They're after that. We've had all the Mag 7s go through. I think NVIDIA and Dell were the two that I did like. This is the session gap. We've filled it, but we're not over it. So like NVIDIA for me needs to show a little bit more strength, because even then, and this might be more day trade now, you have this overhead resistance now. So even if it pops up a little bit, I'm like, we'll see. But this is another example of like, what's interesting here is that this is a moment on NVIDIA, 1, 2, 3 day move, right? Where a pattern trader could easily say like, hey, look, this is what we call distributionary. And if it does do a little something like this, right? Come in and then pull down, even all the way down to this neckline, and start to look a little like weak. It might like look like this. Here's your 50-day. It's going to be doing that. It could look like this, but I can't tell you how many of these, and we just looked at this on SPY. Here's your other session gap. It could look like this, and how many of these on SPY we've seen at the index level, which we just looked at. It gets here only for this very bearish setup to like completely reverse. So if you do see something like this, I actually might be more interested around a 111 or even lower, right? Like towards this downtrend, right? I think this is, again, dip buys. So here's prevailing uptrend. So here's your current trend line on NVIDIA. You do have a higher count on the trend line. The problem is that this high into here, this exhaustion that we're looking at right now, is just it's an equal high. So whereas I would rather see, so this is a higher high. This is neutral. I'm bullish like in general, but it's back to that. Is this one where I want to press that bullish bet here? Not necessarily, because where's a better buy? The last buy, 104. I actually bought a little bit of NVIDIA, 104 right here this day. And that was a higher low. So now, again, we have equal highs. Where is that next higher low potentially going to show up? It's close to that 20-day simple, but right around like 107s now, maybe 108s. But I do think it eventually breaks, right? And we eventually get that higher high into 118s, which is what this needs to see. And you kind of just continue on, and get a higher low until ultimately this massive consolidation breaks, right? But this is that prevailing downward channel. And at this point, this is going to be, we're just kind of like here. It's going to look like that. So we got a ways on this one, which might take you in closer to earnings than anything else. So again, not a rush, but now you see why, right? Now you see, like, so this is, can it go? Sure. Am I long? Yes. But am I pressing my bets, new money long here? I'm not. Not to say that it doesn't happen. It's just more cautionary. MSTR looking for sub 200? No. What? Am I missing something? No. No more shorts here. This short's invalidated, man. Don't worry about it. They're gonna be looking for higher lows again. Like, can it come down? Sure. Can you trade it? Sure. But net, they're going to be looking for higher lows to hold somewhere around 350s, 345s, and that prior breakdown level, just over that breakdown level on MSTR. That's right here. So all this, we were breaking down. This one, no, 275 over, and absolutely invalidated over 330s definitively, right? And so you have this massive area in here, which means that anything down here, they could be looking for higher lows. Yes, you're running to overhead resistance from here, but it's just not. I don't think it breaks out right now, but they're getting bulled up. They're getting bulled up. I think same thing across the board, right? Not something I want to chase. Dips coming. Are they buyable? Yeah, probably. How deep do they get? That's the question. TSLA, I will not chart. Completely irrelevant, but because that's a leverage ticker. But Tesla, I will. Tesla hitting its head against the 200-day simple moving average 1, 2, 3 times. This is 293 on this chart right here. Right here. And here's your box, right? So that's the box Tessie's in. I do think that she eventually gets out, but interestingly, there's another box below right here, 270s. I think that you're coming into, so this is clearly a rest period on Tesla, if you haven't figured that out. And here's your box that you're resting in. Again, she's got a break, right? So I think Tesla can go sideways for a little bit more, but this hold over 270, pretty bullish to me. I do think a move is brewing. It's just obvious it's not happening in this moment, but something is coming. Something is coming for Tessie. That's for sure. So again, I would be a buyer if we get some kind of liquidity down below, like close to 250 near term, for a trade, because I think that this 330 area is still in the cards, but I might get a better add again closer to that 20-day simple moving average, which happens to be just under 260 at this point. But I don't think that breaches it without any kind of new headline. If there is some kind of new headline, then sure. But for now, this prior support or this prior resistance is actually acting as support at 270. So holding 270, pretty constructive. Not ready to roll, but constructive. AMD earnings this week, guys. We've looked at AMD quite a bit. I think so. You're over 100. She's making a move, but that's tomorrow. I can't touch it. Making a move right now, not out of the gate, but over significant SMAs. ARM again. Also, look, ARM earnings this week. I am not going to do. We did NVDA. Jovi. HIMS, no. HIMS has earnings. So the only thing you can do on these things is go into here and just look at what's their average move, right? So ARM, I don't even know that ARM has, they did 1, 2, 3, 4, 5. Yeah, so ARM 3%, 4%, 15%. You can take an average move, 47%, and derive what the average move is, and then you'd have to slap that on for either direction. I do see a couple. Jan Elf. Okay, I'll look at this. I haven't looked at this in a while. This is probably one of the ugliest looking charts. It is trying to stop going down. This 49 is a very weird level. It's not quite here yet. Just about. It's a big box. 58. This is like a 50%. I mean, that's a huge move off the lows, percentage-wise. 37% off the lows. The problem is for now, this looks like resistance. I just don't. It's a makeup stock. Big move. I think it has to digest it. Here. So this is 69.10. Tag, resistance, 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 breakdown, bounce up. It's at a, what we call this a pivot, right? So pivot, 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 pivot. I think you have to assume this is resistance right now. So honestly, this looks like it might get smacked. And if it does, then you need low 60s to mid 50s to hold to be constructive here. This honestly looks like it's in for a pullback. The best type of pullback would be to 62s. And then I think it goes sideways and maybe tries to come up again. But if this high, it does not breach, then you need to be really cautious that a new low comes in around 56s, which would be, again, back to that 20-day simple moving average, probably around the area where technically would be more interesting. Chasing this breakout that's not actually happening, you'd be anticipating, because that breakout's not happening just yet. You're at your upside target. UNH. I actually bought some UNH. I mean, call me crazy, probably crazy. Like right around the same price. I don't know if it was above or below 110. It might have been just above. Yeah, just around 110. 113. I bought it here. 410. Bought it this morning, this day. Literally right there. So it's slightly below what I got, but I think that's going to serve as a bit of a pivot. So sub 400 is wild, to me, but it's not in the best space. This is more defensive. So I just looked at this. You're deep below the 200-day simple on UNH, and I mean deep. 395 here. This is not something I would be looking at short term. If you buy UNH, and I'm talking equity, I don't think you should be even charting this right now. Because this is like check back with me after a year kind of thing. And if it's lower than 200 or 220s, then cool. But that's wild. Every time we've gotten something like that, or a 200-week simple moving average, it's been a decent dip. There are times like this where it just completely gets sold off. But that's $14, right? That's when is that? 2008. I mean, that's like financial crisis. I don't even know what was going on here. I don't know what was going on from 2007 to 2008 in UNH. But this would be normal 200-week simple moving average dip buys. It happens. But in large part, they're generally bullish or generally good areas. I'll just say this has not been this steep of a 200-week simple moving average in a very long time. It's pretty steep. So I don't expect this to break out anytime soon, is kind of like my other point here. It's just if you like the idea of this, you shouldn't be looking at it for a year or so. Call me in a year. But I mean, I like it. Spencer's in the house. Yes. Grab, Munya. Grab, I bought. My boy gave me a bunch of flack for buying it because I was like, get out of my trade. But this was upside target. I'm definitely not buying anymore. I ended up selling a little bit. It's trying. I just think it's made a huge move from here. So again, these are all similar charts. Everything's super similar. You're in a very much wait and see mode. So I think we do go sideways. I think neutral trades are the play. And if you're bullish, then a little pullback here would be more constructive. So this pullbacks would be closer to the 450s area on Grabby Grab. Sorry, mate. Love ya. Bye. JPM. So I have JPM. So there's this thing about Hoodie, maybe even SoFi we could look at. Fintech in general tends to bottom first. So here's a stock. And let me see about the financials, XLF in general. So the financials as a sector have not extended beyond Friday's high, but JPM as an individual name clearly has. I am long JP Morgan here, and I'm getting very nearly close to my first targets. So I've already trimmed a little bit. I don't see this going over 260 right now, so I will probably close the majority, if not all, in that area. And for right now, again, this is more like trading. If you're trading, this is an area to take measures, meaning like take a little profit down if you haven't yet. I mean, I guess I could take a little bit more, but I don't have much left to take. And potentially see a pullback to maybe retest that breakout zone. But I mean, I'll just say this is a stronger chart today, out in the wild. This is one of the stronger charts that's out in the wild. If we get over 254, that's where this 260 comes from. It's possible that we see 265, but again, in that case, like if you do fill this fair value zone, I am definitively removing all trades. But not a place for an investment entry, necessarily a little sketchy. Pullbacks would be better. And then see new rips. But JP Morgan, I got to give it to him. Not slowing down right now. Just hitting this level. Not slowing down. Interesting one. RIVN can't break 14. You cannot, right? So RIVN, I don't know that she breaks out. Again, you guys may or may not know the levels. The breakout level would be 16.5. In which case it usually gets stuffed. Like a turkey, dude. Just gets stuffed right into the 16s. But this is the range, right? So as close to 10 as you can. $12 is probably fine because you're towards the low end of that range. But if we do see a pullback, I would expect pullbacks to be slightly below that $12 level. I just think we had a little bit of run up. We may still get a little bit of a run up, but it's very much TBD. I think eventually these guys make it, but I don't know that this is the quarter that it's like crystal clear. So I think it's still a little muddy, unfortunately, on RIVN. Next Gen asked for Moo. I did not. We did look at AMD. Does Moo report? It was MU. Mike wrong. They do not. They do not report. So this is tradable. I like it better than some for sure. This is the 200-week simple moving average right now. This does not look bad at all. So this would be an easy catch up. So 1, 2, 3, fourth time breakout coming back in today, here and now, retesting. I think this is a good call out. Over the 200-week simple moving average, Micron is a laggard to the sector as a whole. I like this. Semis have kind of lagged a bit as well. So we got to see what is the upside. It's about 84s right in here. And so you'd be looking to fill essentially this shelf. You see that breakdown? So from here to here, that's up to 84s. for a weekly move. Tradable weekly move. It's sitting at $80 right now. That's like 5%. Yeah. Possible 5%er. I don't hate that at all. I really like the area that it's bouncing off this morning. That's pretty constructive. Again, it's a little bit of a laggard. It usually makes that kind of a move on Micron in like 1 to 2 sessions, I'll be honest. Victor, 4,441 for sure. Real VC APP. Need a time check. I got a couple more max. Yeah, so this one again failed to break down below the 200. No dice. 230s, 220s. I think is where I've been trading it down to. Had to cover my shorts every time it's got there, and it's held. Little break of structure. Can it pull? It can pull back. It can pull back, but the pullback is probably not going to be that deep this time. Probably more like 275 to 250. But this is looking neutral. Right back into resistance. I think this week is more like a lot of this. You're right into these resistance levels. Look at this. But it's very possible that a lot of things kind of just hang out here. This is earnings. That just hang out there until the index, either the index level breaks range or they have earnings. And in which case, downside would be that 250, but upside would be like 350. So you got like $50 range in either direction on APP for sure. Yeah, something coming, I think, for Tessie. It's a watch. It's a watch. Tessie too volatile for my. Tessie is one where I watch so closely where like you can get a lot of that move in a session. Blue-haired people. Oscars, Apple. We can do this. Apple sub 200. Boom, 20-day. So Apple is just done. You guys, exactly what I was talking about. I know it had earnings. I know whatever fundamental logic. But watch Apple here. This chart is just done almost exactly what I've been saying to watch for at the index level. So here's that 90-day pause on tariffs. Look at this. Right into that 20-day simple moving average. I think Apple is a long. Just saying. I can take this whole thing across the board. Look at this. Look at that. If I took this all the way to here, does that, guys, did you see that? I'll put this 200. It's psychological level too. I have a handful of confluence here. 200. I bought some. I already bought some Apple. But if you're waiting for Apple sub 200, you had it this morning. This looks like a long to me, technically speaking. I don't care what the fundamentals say. Price will tell me right now, but as long as it's holding 200, look, I like it. I might even buy some more, like right now. Because I think this could at least move. So upside here would be like 220. I don't think it breaks out either. So I will say that, right? I don't think that we get a breakout. The best month of the year for Apple is July. So if Apple makes this move, and this is very typical because you get WWDC, you have that whole thing. You get this move from here, post this quarter's earnings, potentially into 240, but like this is going to get stuck. It's going to get stuffed for a minute, probably. But even that will likely be a higher low to maybe buy. But that might be as high as 218, as high as 215, 212, and then potentially sideways. But eventually up here, which in that case, usually also July, after July, it's like a sell from a trading perspective, because you never know. But this technically medium term, everything's medium term right now to like September or July. It is, that looks like a textbook long. I'm sorry. It looks really good. I'm probably going to take that trade. I mean, some of these I'm just going to scan through. Nike, ANET. Yeah, also that, I mean, that one looks good. Is it, I asked Amphenol? HWM, I don't know what that is. Aerospace, I don't know this stock. That's a space stock. Holy schmoly. Dude, where are you finding this? TVD. I don't know what this stock is. That's aerospace. Well, it says aerospace. All I'm doing is just measuring a extension. 173. You're at a stall mark, so you're 50% of the extension here. Meaning, like, if this is your box, if this is your consolidation box, you're halfway through the move right now. Right in that overhead resistance. Interesting. I don't know what that is. I've never heard of this. Amphenol, I know. It's just, this is picks and shovels of picks and shovels. This is always a good all-time high. Look at this bad boy. Just own it, man. Just own it. I really don't trade it. Doesn't move fast enough and doesn't have enough spread, bid-ask spread, but this is new all-time high. Amphenol. If you know what this is like ether, this is like transceivers, cables, all that kind of stuff. Anything data, not really AI, just data. General, that's a big break. That was the request, right? APH, yeah. Amphenol. It's a great company. But if you're bullish on data as a concept, then you want to be long Amphenol. All right. Last one is SOFI, and then we're going to call it. I know you guys have a lot of requests. SOFI, again, so this is fintech. What I was saying, fintech has a tendency to sometimes be the first one out of the box, usually also the first ones to dip. Holding all significant simple moving averages today, constructive. Very, very constructive, my friends. I think the double beat, skeet, if that's it, dude, that's probably the best looking double beat and skeet SOFI I've seen in a long time. Holding the 50. It's not over till it's over. I don't know that it's over. You are 1265, crucial hold. Congrats to the SOFI Bulls, but you are not, my friends, out of the weeds yet. You must contend with two levels, 1350 and 14. We know 14, but 1350 comes from here, and this prior breakdown, and where the acceleration move happened post earnings. So you must get over 1350. If you do not breach 1450, which is that earnings high on SOFI, if SOFI does not breach through this box, unfortunately, it's very likely that you could see like a 45-day consolidation. Would not be the first time, will not be the last time. That's how earnings go. If on the attempt to make a new high, which is now, we are now attempting at the moment. If on this attempt, it is not successful in creating a fully new high over 1450, it is done for probably the quarter. Not going down, but likely going to the side. Sorry. Love y'all. But no, he didn't do ANA. It's more like the Amphenol chart. Look, dude, I don't tell you, I'm long. Oh, but they got earnings. I think now is like for your investment stuff. I will say this is not a week that I'm looking to chase in general, but I think it's potentially a week that you could be looking at. I think it's a week that you could be looking at cover calls. Quite frankly, we have a lot of volatility coming. If we get too hot and heavy, like if we see 580 on SPY, I mean, you gotta beware, right? And I don't want to be unless you if you believe that we're gonna get a surprise rate cut for whatever reason this Wednesday, look, you're probably looking for a limit up day, 5% on SPY overnight, or intraday, and you're probably trading for that. But if you don't, you have to be aware that some of that price action may be showing up here, and we're moving from complacency to a little bit of that euphoric moment in time. And I'd rather be a little bit more cautious. I do think that dips may be buyable, but we have to wait and see, right? Like the question is, how deep do those dips get? I think they will be viable in general. And if you want to know how I'm going to track that, it's very much going to be, so we're going to do what webinar on Wednesday. I just dropped the link again. Please go ahead, register. It's free. We'll walk through it. Actually, I posted something. If you can give the post a little retweet, that would be cool. Post is dropped in the chat. It's a full system. So if you remember that pinned tweet last month, if we were over this, I'll walk you through exactly what that terminology means, step by step, exactly what I'm looking for. The coolest thing is that I made 100%, like 100%, 100%, not 90%, 100% sure that that's what's going to happen. what I go through on Wednesday. And when that happens, then I will make real decisions. But the confidence level that you get from having some kind of clarity in terms of the direction of the market is huge, right? It makes all the difference in the world. We're not guessing so much. So again, I think that's where we are. It looks good in general, but we're not at a spot where I'm interested in chasing any kind of breakout here at all. Because at the end of the day, I think the best thing to see is another higher low. So if we do see it, we do lock that in. I think that's amazing, but that's what we're going to be looking for. Until then, we shall see. So, all right, guys, I love y'all. I'll see you on the next one. Paper out. Peace. Have a good week.
Today is the day to master the market.
90% of the time, today's price action or the day that you get your NFP data out, 90% of the time, it actually marks the high or the low for that entire month, believe it or not.
Gain the knowledge that top traders use every day.
But the market is going to take its time to decipher whether or not they believe the data that we got today. We've got to give the market some time. That's why this part of the rule set here, which I will get to.
Turn knowledge into action and you'll dominate the market.
There's big space between some of these. There's like a big move coming.
Join our free webinar and start mastering NFP trading. Register now.